When I first bought Bitcoin, when MicroStrategy did in the third quarter of 2020, we thought of it as digital gold. And I would say we were technocrats. My view was this is the dominant digital monetary network in the world. It's like the Apple computer or the Facebook of money or the Google of money. And it's going to be a 10x or 20x investment return. But then by the fourth quarter of 2020, after I'd studied even more and I'd met all the Bitcoiners in the community and I'd studied the words of Jack Dorsey, and he very famously said this to me and it stuck with me forever. He said, Bitcoin is an instrument of economic empowerment. And then I thought about what that meant and I realized that this is actually property rights and freedom for 8 billion people. And that makes it ethically better than Apple or better than Google. It makes it better than Microsoft and Facebook and Netflix and any great technology idea. So I went from being a technocrat to being a maximalist. I think technocrats think it's the dominant digital monetary network in the world. The maximalists think it's an instrument of economic empowerment for 8 billion people, which makes it even better. And it makes it an ethical, moral imperative. Well, I think the best strategy is just Bitcoin cost averaging. Just when you have free cash flows, if you said, I'm going to buy Bitcoin over the course of a decade, and every month or every quarter you say, what kind of free cash flow do I have that I want to save for more than 10 years? And you sweep that into Bitcoin. Think of it as a long-term savings account. If you need money for the next 12 weeks, you probably want the money in the local currency. And if you need money over the next 12 to 24 months, you probably want the money in like the dollar or the world reserve currency. But if you don't need the money in the next 2 to 3 years, it's really a long-term savings. At that point, probably your best bet is just sweeping into Bitcoin. And don't measure yourself on a 12-month time horizon. Look over the course of, say, 4 years. I think the 4-year simple moving average is a useful metric to look at. If you consider, you're buying Bitcoin at a ratio of the 4-year simple moving average, and if you look at your results over 4 years, then I think that's kind of helpful. When people look at 4 months and 4 weeks, I think they tend to get pretty frenetic and it induces anxiety. And on the margin, there's almost nobody that can make money with a 4-week or a 4-month time horizon because you're a trader at that point. And you saw in my presentation today, I showed that 99.5% of the days of the year, nothing's happening. And so the odds are stacked against you if you're attempting to time the market. I think the lesson of the bear market is if you're going to be in the Bitcoin business, you have to have a long time horizon. And you need to always look out 10 years, and you need to expect volatility will come from market to market and make sure that you're positioned to weather the volatility, right? People that were overly levered in the bear market all went bankrupt, and those that actually managed to manage their finances more responsibly get through it, and they benefit when the bull market comes again. I think that if we take today in particular, there's a panic sale of all the crypto tokens, and most of them are crashing 15, 20, 25, 30%. Bitcoin is the best performing asset. So when people have other tokens, sometimes, and they have Bitcoin, they will sell their Bitcoin to support their other token. For example, when Terra Luna crashed, Do Kwon owned a bunch of Bitcoin, and Do Kwon sold the Bitcoin to try to support the Terra and the Luna. When Three Arrows crashed, they had a bunch of Bitcoin. They sold the Bitcoin to try to protect their business. When Alameda crashed, they sold the Bitcoin to try to prop up the FTT token. When FTX crashed, et cetera. When Celsius and BlockFi were crashing, people were selling the Bitcoin they had. So when the altcoins crash, there's a near-term panic transaction where people panic sell Bitcoin to raise liquidity to try to protect their business from going bankrupt or unwinding. At some point, they either stop because they realize it's not going to work. You can't save FTT. You can't save Terra Luna. They weren't savable. But both of those companies sold billions. I think between the two of them, they sold $5 to $10 billion worth of Bitcoin at panic sale prices. So the crypto ecosystem in a risk-off trade will contract and it'll sell Bitcoin. But then at some point, all the altcoins will go to zero. And then people will realize Bitcoin is the only asset worth holding over the long term. And then you see the reversal of that, and there's a surge of energy into Bitcoin. So in the near term, the rationalization of the market isn't really good for anybody if you're measuring your performance in days or weeks. But if you're measuring the performance over years and decades, then it's completely healthy. And what's really happening is every single person in the crypto industry today, they like Bitcoin, and they also might have liked an altcoin. And they woke up and they realized that, in fact, Bitcoin is better than they thought it was, and the things they didn't appreciate about Bitcoin, like the fact that it's indestructible and nation-state censor resistant, and it's got incredible base of support, they realized that's actually more useful than they thought it was. And then they realized that maybe there's a lot more risk in the other thing that they were holding, and maybe their other token wasn't as good an idea as they thought it was. And so what you'll see is all the crypto people will start to shift their allocation from the altcoins back to Bitcoin. If you thought your altcoin was going to the moon, Tether is indestructible, and Binance is a perfect network, then you would say, oh, Bitcoin is boomer coin. But if you actually think, well, maybe stable coins won't be around, and maybe all the crypto exchanges aren't as secure as we thought, and maybe my altcoin's not going to the moon, you think actually Bitcoin looks like the safe haven, risk-off reserve asset and the safest network, and it's the one that isn't going to get attacked. And so I think this is an educational event, and the first people to get educated will be the crypto bros, all the crypto traders and all the crypto token investors, and they're going to migrate a lot of their capital and a lot of their development energy and a lot of their focus to Bitcoin. And then the next layer or the next wave will be the mainstream investors. And they will look and say, okay, the market's rationalizing around Bitcoin, and so now that the market's cleaning itself up, it's safe for us to come in and buy Bitcoin. But they'll wait until all the dust settles, and that'll be the second wave, the second leg of the bull run. I think that those banks are decreasing the amount of liquidity in the crypto market in general. Generally, the liquidity in the Bitcoin market or in the crypto market has been a negative for Bitcoin. Most of the companies providing liquidity, FTX, Celsius, Genesis, BlockFi, Voyager, Three Arrows, Alameda, they were actually shorting Bitcoin. They're actually selling the Bitcoin or rehypothecating Bitcoin in order to keep the price down. And so as those companies go bankrupt and they wind down their business, then there are fewer and fewer ways to short Bitcoin in a naked fashion, or there are fewer ways to manipulate the Bitcoin price. And so as that happens, then the balance of power will shift from the traders and the bears and the crypto tokens back toward the Bitcoin holders and the long-term Bitcoin investors. And that lays a very strong foundation for the bull market to run. So I'm not bothered by banks cutting off on-ramps or off-ramps to the crypto industry. If anything, what it means is that all the money in the crypto industry, if it wants to exit, it has to be converted to Bitcoin. People will sell their crypto tokens, they'll buy Bitcoin. If they want to get their money off the exchange, since they can't convert it to dollars and take it out of Silvergate or Signature, they'll convert it to Bitcoin and they'll withdraw it to the Bitcoin network. So all of these things are bullish for Bitcoin, and they represent the maturation of the market and the rationalization of the crypto market to focus on Bitcoin as the unit of account, the reserve asset, and the settlement network. Well, I think that, the history of macroeconomics is the central banks print currency, the economy goes through boom and bust cycles, but ultimately the deflation they calculate is a manufactured political metric. If you look at the reality in every country where the currency collapses over the course of 10, 20, 30 years, there's always inflation. The currency always loses strength. So it's not likely that that scarce desirable products are going to get cheaper anytime soon. It's possible that consumer goods will get cheaper for a short period of time and then they will get more expensive again. And that's what I would expect to happen, because that's what's happened in Mexico and Argentina and Turkey and all through Africa. And even in the United States, if you look in the United States, there really isn't any example of any consumer good or durable good that's cheaper today than it was 30 years ago, or 20 years ago, or even 10 years ago. Everything keeps getting more expensive. Well, the governments haven't taken over Bitcoin, so I'm not concerned about that. We don't have any CBDCs in the world that I can see right now. People speculate about whether the governments will release them, but there's a massive political debate about whether they will or they won't. I think that I'm not worried about the existence of a non-existent thing. If there is a CBDC, then I'll have a comment on it at that time. Right now, it seems to me that the people that actually are most focused on spreading the fear of the CBDC are the crypto traders, and they use it in order to rally Bitcoiners and other people to support the crypto industry and the stablecoin industry and crypto tokens, because it's in their best interest. I actually don't think Bitcoin is threatened one way or the other. I think Bitcoin represents the apex property of the human race. In America, I think that most politicians are against a CBDC because of privacy concerns. And so I don't think it'll get through Congress. But I actually think even the banks are against the CBDCs because it would undermine the banking industry. The banks want to actually issue the money. They don't want the government to issue the money. So I just don't think it's a big concern right now. I'm not worried about it. There is no CBDC on the horizon in the US. I think that 3, 4, 5 years from now, there may be a digital currency issued by a bank in Europe or issued by a bank in the US, and it'll have some regulations around it, and there'll be a big fight about how much privacy there is, and there'll be a big fight about how much disclosure there is and who can issue it. It's very political. Likely it will be less private than stablecoins circulating on crypto networks. It will be more private than the mythical, CBDC that people imagine, which is the Orwellian, state coin. It'll take longer to arrive than we think it will. And it won't replace Bitcoin because Bitcoin represents a scarce, desirable asset, which is property. It'll simply compete with banks, or, instead of wiring money on a Friday afternoon at 2 p.m. talking to your bank, you'll wire money from your mobile phone on Saturday afternoon at 2 p.m. And it'll probably be from the bank app. And it won't be that different, but it'll be a little bit easier and it'll be programmable. And ultimately, if you hold all your money in that dollar, you're still losing it all because, inflation's going to take all your money away. So we're really just talking about checking accounts and different types of checking accounts and making them better or not better. And Bitcoin is a savings account. I think it already is. Bitcoin represents the first ethically sound, technically sound, economically sound digital property. So the first true digital property. And the United States was founded on property rights, the pursuit of property rights. And so Bitcoin is digital property, or the digital transformation of property and property rights in the 21st century. So in that regard, it's destined to be part of most everybody's life, since everyone with any wealth or any property aspires to keep it. And Bitcoin is the best way to either acquire or keep your property. I think for that reason, it will also be part of the cultural fabric of every country. Every place in the world where you're allowed to have property, every non-communist country, and communist countries, they basically have communal property. No one is allowed to own property, like in North Korea or Cuba. But if you can own property, people all aspire to own a house, they all aspire to own a car, they all aspire to own something. Well, Bitcoin is the ultimate property because you can own it and you can keep it and you can take it with you. So in that way, it's pretty central to the cultural fabric of most societies. I wouldn't be surprised. I think that governments will actually hold Bitcoin in my lifetime. I think it'll start with sovereign wealth funds of the more innovative nations like the Middle East and Norway and Switzerland and the like. And then I think it will become part of banking reserves, and the more innovative entrepreneurial countries like El Salvador will move first. I think then the mid-sized companies, but in time, Bitcoin is an asset. And so the U.S. government owns land, and the U.S. government owns gold, and the U.S. government owns certain other assets. I think that in time, the U.S. government owns Bitcoin now. In time, they'll realize that rather than owning it and selling it, they should own it and acquire more. But the people that embrace Bitcoin the earliest are the ones that have the need. And so if you have an incredible need, you have an open mind, you'll discover the solution. A person that's freezing to death will embrace fire and learn to start a fire. But a person that lives in a very comfortable apartment on the Upper East Side of New York City with electric power may not know how to start a fire. And so we should look to the people that really have the need as the early adopters. And as they adopt, the knowledge will spread. And eventually, everybody will understand it. Well, I would say go to hope.com. Bitcoin is hope. And if you go to hope.com, you'll find a bunch of books about Bitcoin. Read the Bitcoin Standard. Read other books on Bitcoin. You'll see courses on Bitcoin. The Saylor Academy has a free course, Bitcoin for Everybody. You'll see there are courses on monetary history, courses on Austrian economics. There's lots of links to YouTube, advocates and educators. So for anybody interested, I would say before you buy any Bitcoin, educate yourself on it, right? Invest your time before you invest your money. And the nice thing is there are hundreds of hours, if not thousands of hours of content available for free online if you want to take the time to study it. Once you've educated yourself on it, then you can decide whether you want to participate as an investor and save your money in it, or whether you want to launch a Bitcoin-related business, or if you want to actually integrate Bitcoin into your business. I would say everybody ought to actually make the greatest contribution they can make. If you're a neurosurgeon and you make a lot of money as a neurosurgeon, probably the best thing for you is keep being a neurosurgeon and take the money you make and buy Bitcoin with it. Once you actually understand Bitcoin and you trust it and you've decided how you're going to buy it and how you're going to store it. But if you're a software company and you're building a financial application or a money transfer application, you probably want to understand Bitcoin and Lightning and build Lightning into your software application, because that's what you do, like Cash App is what they do. Education. I just think every community, every government, every corporation adopts Bitcoin at a different rate depending on how educated they have been. So if you work for a company, your challenge is to educate your executives on how Bitcoin can benefit their products, services, and their balance sheet. And if you're in a family, your challenge is to educate whoever has the money in the family on how to protect the wealth of the family with Bitcoin. And if you live in a country, your challenge is to educate the mayor, the governor, the senators, the congressmen, the presidents, the regulators on how Bitcoin can benefit the country. And the people that understand it, the more they understand it, the more they love it, because Bitcoin is a solution to everybody to make their life better. Bitcoin is like electricity, is like mathematics, it's like understanding thermodynamics. There is nothing on this earth that doesn't work better with an understanding of thermodynamics. So it's like explaining that you don't want a hole in the balloon or the fuselage and you want the wheel to be round and not square, right? So educating people on Bitcoin will make your product better, your company better, your family better, your life better, your government better, your city better, your state better. That's the challenge. And if people don't understand, they'll be afraid of it because people fear things they don't understand. Just like, people were against electricity, they were against cars, they were against planes, they were against fire. But a lot of people are afraid of fire. Frankenstein was afraid of fire. I think the implication of that is that all crypto tokens without proof of work or without energy are going to go to zero. Because, there's one Bitcoin and there's 25,000 crypto tokens based on proof of stake that were created by people. And it only takes a person about 3 to 5 hours to basically create a staking token. But the implication of AI is the AI is going to create 25,000 tokens an hour. And the AI is going to create 25 million tokens before it creates 25 billion tokens. Anything that can be created with intelligence is going to zero, right? So if you do something that the AI can do, then you're being commoditized down. There's going to be a brain power revolution. Like, Julius Caesar had 300 slaves, and that created 30 horsepower. If you were the emperor of Rome, you had 30 horsepower. And if you're a fisherman today, you have a 300 horsepower motor, which is 3,000 slaves. So a fisherman on a middle-class, working-class budget has more horsepower or more manpower than the emperor of Rome had a few thousand years ago. The AI revolution is a brain power revolution. Today, I have 2,200 employees and it costs $350 million a year for them. But one day you will have 2,200 AI employees and it will cost you $300 a month. And so the things that will be valuable will be things that the AI cannot create. And if the AIs take over every computer in the world, and they turn all the computers to attacking the Bitcoin network, they will dent 5% of it. They might slow it down by 5%, but that's all they could do because Bitcoin is based upon 350 exahash, and all the computers in the world can't generate 400 exahash. So, on the other hand, the AIs can generate 14 billion fake Twitter accounts that will be more articulate than you are, that are more articulate than me, that work harder than me. They're better looking than me. And so if you're actually trying to make your living by doing that, that's a problem. You need to make sure that you're not just being cute. You need to actually have real power, real substance. So I think AI will disrupt lots of industries. And if you're in an industry where it's disrupting, then you need to move. You need to harness the power as opposed to be in front of the steamroller. And then there are other things AI can't make more of. It can't make more of beachfront property in Miami Beach, right? And it can't make more Bitcoin. and it can't make more hash power. And so the things the AI can't make more of are going to get more valuable. And if the AIs take over the world, the one thing I guarantee you is they'll want to be paid in Bitcoin. All of our customers have large budgets for employee benefits, and they also have large marketing budgets. So most companies, most brands, retailers, airlines, hotels, consumer packaged goods companies, they would like to have the compelling marketing campaign, so a crypto-friendly marketing campaign that appeals to 20-somethings, 30-somethings, millennials, Gen Z. And so that's hard to do with the other crypto tokens because they're unregistered securities. It's illegal. It's unethical. And so we're offering them the ability to distribute Satoshis, which is a commodity as part of a crypto marketing strategy. So we're giving them a compliant, legal, ethical, ethically sound, economically sound crypto marketing strategy. And so that's one reason it's really important. The second is it's a chance to actually build new products and services. So if you're Amazon, for example, now you could actually build a product offering where when people post a book review, you can distribute Satoshis in 1 second. And if your customers like the review, you can distribute more Satoshis to the author. And then if the book review drives book sales, you can distribute more Satoshis to the author. That's a kind of a redefinition of the product offering, and it drives influencer marketing or viral marketing. You do that, instead of giving hundreds of millions of dollars to Google and Facebook for digital advertising, you give away hundreds of millions of dollars worth of Satoshis to your existing customers. That builds a much stronger bond between your customers and your website, and your customers and their account, and your customers and your product. And so it's a chance for them to differentiate their products and services. It's a chance for them, like, do you really want to give $1 billion to Google when you could give $1 billion to the people that buy your product, right? You might as well cut out the middleman and then give your customers the money. That will delight them and make them love you. When I go post on your website my product review or I create a video showing other customers how to use your product, if I get rewarded by the brand, then it incentivizes the creators, the artists, and the customers to engage with the brand. Now, I can't do it with digital advertising. It just doesn't work that way. At the end of the day, the big winners of digital advertising are the big digital networks like Google and Facebook and the like. I can't do it directly with the credit card with the 20th century banking network because the minimum credit card transactions are $2 to $5. There's a 2.5% fee, and there's a 60-day settlement time. So the money is too expensive and too slow. It's low frequency, high impedance money. So, and I can't do it with a crypto token because a Solana and a Cardano, they're securities, and that would be a securities law violation. So my lawyers won't let me. So MicroStrategy is offering this module where any company could just plug in the module, and if you've got 5 million customers, you could generate 5 million Bitcoin wallets immediately. And then you could create these Lightning rewards so that they could do 23 transactions with you and get 23 Satoshi rewards all instantly. And then when they're ready to withdraw their money, they can use any Lightning wallet or any Lightning aware application to move the money around. So instead of frequent flyer points that are non-fungible or loyal customer credits that might expire, you're now actually giving people the gold standard of frequent flyer miles. You're giving them Satoshis, which are immortal, that go up in value 20, 30, 40% a year, that are useful anywhere in the world. And that's like the ultimate dopamine hit. So that's why we're excited about the offering, because we think you can build it into the Coca-Cola website or McDonald's or Nike or Amazon. And we can tap into these massive digital marketing budgets, and we can tap into the sales budget, and we can change the nature of the product. And And it's good for Bitcoin, it's good for Lightning, it's good for our customers, it's good for the world, it's good for the customers of our customers, it's good for their employees. I've been reading a lot of books by Murray Rothbard, A History of Economic Thought from an Austrian Perspective, Conceived in Liberty, which is the entire economic history of the American colonies before the Revolutionary War. All economic histories, monetary histories, political histories are very interesting. Books rooted in libertarianism are interesting. I like Robert Heinlein. He wrote a book, The Moon is a Harsh Mistress, right? In a way, it's about, libertarianism and freedom on the moon, but it's rooted in the fight for freedom everywhere, the fight for freedom in the American colonies before the Revolutionary War. It's a story as old as time. People attempting to live a better life free from authoritarian pressures and oppression.